welcome everyone. Sorry we couldn't get around to see you in person this year. So let's now move on to our best prospects for the current year. Any important themes, team?
Well, yes, especially, in July, we saw small caps sell off significantly in the US. You saw the bellwethers, the FANG names, the S&P 500 hit new highs every single day of this month. But a lot of the smaller names had serious moves down. So as they started underperforming, we actually used that opportunity to top up some of our favorite names that we either already own or pick some new positions. And we just talked about how we did that with Celsius over the past, couple of weeks. The pullback means that our portfolio has a lot more upside now than it did a few weeks ago. So this is something that we have always tried to do, and we will continue to do. Focus on areas of the market that are beaten down or temporarily ignored for whatever reason. We've talked about SPACs presenting a good opportunity, but there's a lot of spin-offs that are coming to market recently, and there's a lot of new raisings and IPOs. These sometimes are very well received and the stocks trade up significantly, and sometimes they're forgotten for a period of 3 to 6 months. It is within that period that we try to take advantage of the opportunity if it's a name that we like, because the market is focused and looking elsewhere. So, Chloe, what about yourself?
Another type of idea that we're always interested in is long-term growers, especially when they're misunderstood and mispriced. UK-based online retailer Boohoo is a great example of a business that's going really well and a share price that's not reflecting that. It's hard to deny the strength of the Boohoo business model. Its sales have increased more than 50% per annum over the past 10 years, and that whole time it's been both profitable and cash generative. However, the company has had some ESG issues over the past 12 months, which is what presented the opportunity to us. While management have taken a number of steps in the right direction to rectify these issues, the stock is simply uninvestable for a chunk of the market. While it may not ever be a darling stock, if the business keeps growing like this, the valuation gap will have to close at some point. And we've got a number of other examples of this in the portfolio. What are you most excited about, Gareth?
I think some of those recovery stocks, some of the cyclicals, particularly the higher quality ones, I think they have a long way to run still. We have this weird all or nothing sort of market. Back in February and March, the US bond yield started its move from 1.5% to 2.5%. And all anyone could talk about was inflation. Then the Delta strain comes along, cyclicals get punished, bond yields fall again. I think it's important we just look past the noise. We've talked about Linamar already. Motorpoint, the car dealer in the UK, I think it belongs in the same group. We own online travel retailer lastminute.com, which is heavily exposed to a recovery in leisure travel in Europe. And we also own the airport in Vienna, which is linked to some of the same themes. Look, there's no doubt this Delta strain has upset part of the thesis. It's given everyone pause for concern. But I think there's a massive catch-up period here of holidaying and partying and getting back to normal. I remain very much long-headonism. I think that there's some very good signs coming out in the UK, in particular, that they are emerging through this Delta strain. And I think these businesses that I've mentioned, I think it's very likely that in 12 months' time, they'll be facing significantly better business conditions than they do today. If I'm wrong, and it takes 24 months or 36 months, they've got the balance sheets to survive until they can prosper. Look, one way or another, I think life's getting back to normal, and we're all going to have a lot of catch up to do. And I want to own some names that are really linked to that.
100%. One area that I'm personally digging into is ad tech. Advertising technology, that is. I won't talk any names yet, but you should keep her out for our upcoming monthly and quarterly reports, as we're definitely going to be talking about this stock that we put in the portfolio recently. It's an exciting industry at the moment. Digital video advertising continues to grow, and connected televisions are becoming more common in households. This allows advertisers to target the right kind of person for the right kind of ad, leading to higher returns on investment for someone who wants to place an ad in front of an eyeball. We love this business, and we're excited about the prospects that it holds. Now, it just goes to show that even though the markets are sitting at all-time highs and much higher than they were 12 months ago, the environment is constantly shifting. Technology is constantly evolving. There is always something that has a lot of pent-up upside the market is forgetting about or just starting to realize and find out about. So we're very excited about the new positions we put in the portfolio and the prospects for returns over the coming 12 months.
Thanks, Harvey. Thanks, Chloe. Look, 2021 was a year like none we've ever experienced. It's unlikely to be repeated anytime soon. But the process that led to that very good year, the flexibility, the speed, the ability to go where others are unable to go, they will have payoffs in the years ahead. Thank you very much for your time, everyone.